This is I don't know. There may be very valid political reasons why the Biden administration doesn't trumpet this as much as it might. But we are actually producing a lot of oil, and there is not just an economic consequence to that. There's a geopolitical consequence to that.
Well, hi, Ali. Thanks so much for having me. Nothing like talking about the stealth recovery in U.S. shale on a Friday night. So thank you so much. But it is absolutely true that U.S. domestic oil production has been surging. And this is a relatively unappreciated aspect, I think, of the U.S. economy at the moment. If you look at production, we're at something like more than 13 million barrels per day in the U.S. So that means the U.S. accounts for something like 1 in 8 total barrels produced on a per day basis. If you count in things like other types of liquids, it's even higher. So these are absolutely staggering figures. And as you mentioned, it kind of puts a dent in the argument that presidents, and specifically Democratic presidents like the Biden administration, are bad for the U.S. domestic energy industry. I think we have to be a little bit careful about giving presidents too much credit for the moves in oil prices. There are limits on what they can do here. But you have to question whether or not you can have these two facts. The idea that Biden has been terrible for the U.S. energy industry, but at the same time, we're pumping more than ever. And if you think that, then it also means that you have to question the narrative that the Trump administration was somehow uniquely beneficial for the U.S. energy industry.
Obviously, the difficulty with this topic is there are people, particularly progressive Democrats, who think that everything you just said is a bad thing. That in the fight to alleviate climate change, we probably shouldn't be pumping more oil. This is a tough one because people would like a cleaner environment, and a lot of people would also like cheaper oil. Is that a reason why perhaps we're not hearing as much about this?
Oh, absolutely. I think it's almost a certainty that if Trump was presiding in office at this particular moment in time and oil production was doing what it's doing right now in the U.S., he would be tweeting about it. He'd probably be tweeting about record stock market prices, too. But the Biden administration made a point when they came on the campaign trail about talking about the energy transition, talking about clean energy. And so I think it's quite obvious that we've seen some reticence from the administration to own this boom in production. And again, some of it goes back to the question of, well, how much credit can a presidential administration actually take for what's happening in what is ultimately a private industry, a profit-driven industry. But on the other hand, there is sort of this cognitive dissonance where Biden wants the transition to happen, but at the same time, obviously wants prices to come down. We know that gas is a politically sensitive hot button topic. It is a political voting issue. And so you could see why they're also very positive about what's been happening in terms of production.
Let's talk about the connection to inflation. Obviously, lower gas prices means lower inflation, which we're seeing. Job creation, because it is, as you said, a shale boom, and consumer confidence, all of which are affected by the price of gas.
Yeah. So as you mentioned, the S&P 500 at a fresh record. And part of that has to be because there is more optimism on the part of investors, more belief in the proverbial soft landing story. So the idea that the Federal Reserve can, in fact, bring down inflation without causing a concurrent spike in unemployment. And if you think back to, just 12 months ago, this was not the consensus position. Almost everyone was thinking that we would, in fact, see a recession in 2023. That hasn't happened. The hard data keeps coming in strong. We've seen retail sales continue to boom. Initial jobless claims are at something like a 1-year low. Housing market that is still relatively robust despite the huge run up in interest rates. And then the really interesting thing that's happening now is that Americans are starting to believe that hard data story. So just today, we got the University of Michigan Consumer Sentiment Survey that showed a massive recovery. Again, a remarkable turnaround compared to earlier in the year, where if you were looking at the soft data alone, it looked terrible. It looked like a recession was already here. And we had that discrepancy between the hard and the soft data.